Hi there and welcome to the weekly video Capital Spreads. Once again joined by a man who needs no introduction. Welcome Bill.
Angus, thank you.
And so lots of economic data and lots of focus on central banks, obviously in the last few days in particular this week. Now let's have a quick look at the UK data. Better than expected manufacturing numbers.
Yes.
Construction PMI wasn't so good, but services came out a day early, obviously a mistake by Reuters there, releasing it. Took us all by surprise. So the services number indicating that the service sector in the UK is still very much in expansion mode. Why is the GDP so weak?
Well, I think what we'll have is, when we get the final revision to GDP, we'll probably get down to no better than like 0.3. But I think one of the things you have to look at is...
Minus 0.3.
Minus 0.3,
yes.
Is that I'm more looking at the retail sales number. And one of the things that we saw before the Olympics started was Lloyd's Bank and the government was saying it could be 16, 17, 18 billion, okay? Well, it seems like if you compared Stratford and East London, they had a booming time, okay? If you had Stratford on Avon, they had nobody show up. And I mean, I think if you look at retail sales generally, everybody stayed home, watched the television, or bought beer and hot dogs.
Yeah.
And I think this will probably have a negative impact. On the positive side, though, it does show that inflation, we'll have no problem with inflation. So as we saw today, no decision and no change by the Bank of England. I see nothing happening until the November meeting. And then I still feel we got the real possibility, of another 50, maybe 75 billion of QE. And I think the key thing here is I expect nothing from the ECB again until the November meeting. Now, why is this meeting key? It's November the 8th. And 2 days before, we'll either have a new president or we'll have a rollover president because the 6th of November is the US election. So this is a real key, but as we all know, the first 2 weeks in September, jam-packed with central bank rates decisions.
Well, that's right. I mean, the focus on that. You're right about retail. Obviously, the British Retail Consortium saying that they saw sales slow recently. So moving on to the central banks then. The Bank of England, again, a very gloomy picture of things. But really, they've been sidelined very much so. The bigger picture is the ECB. So unfortunately for us, we're sitting here. Mario Draghi is talking as we talk. But no action as such. I mean, what can we glean from this? Because obviously the market went with expectations. We've actually seen the German DAX spike significantly, FTSE muted.
Well, I think one of the things that we're looking at, and we have to go back to the 27th of August 2010, okay, at the Jackson Hole. At that time, Chairman Bernanke clearly defined QE2. And within 16 months after that, we did see the S&P up 22%. So one of the things that we're probably seeing is feeling that the ECB, forget the politicians, the ECB now will become proactive. Going into today's meeting, there was almost an 18% probability that they'd drop rates again. Again, I am expecting them to drop rates, but not until November. The one thing, and as you mentioned very briefly, the only thing that I've really seen was in the bond buying program, he did announce that they would be sterilizing it. I think this is getting kind of marginal because the feeling was they are not the lender of last resort, okay? So the simple fact is these aren't bonds that they issued, okay? So I think this was sort of close to the wind. Now, one of the things, again, I've only seen it very briefly, but we had seen people buying the euro ahead. We'd seen it above 126. The last I looked, it was off 10 or 15, trading below that 126 level. But I think the key thing here is before today's announcement by the ECB, we did have Spain coming in, I think, issue 2 4s and 5 years. Very well accepted. My feeling was, well, I'll buy it today from the Spanish government, sell it to the ECB tomorrow.
Yes. Well, that's interesting that the Spanish auction was well received, and it is interesting that the DAX really has rallied significantly. But now, of course, so that's ECB aside, it looks like certainly the market's taking that in its stride and relatively pleased with it. Now, you're not here next week, you're taking a holiday, well-deserved holiday.
Thank you.
But also, most crucially, is the Federal Reserve meeting, which you're going to miss. So could you give us a little idea of what you expect from that?
I expect, again, more verbal suasion, okay? I don't see QE3 because albeit it's not great data, but as you just said about the UK, the US data is improving.
But would you see a sell-off then? Because the market's building up for QE3.
Yes.
Would you see a sell-off in risk assets?
No, I would see almost an increase in risk assets. Because one of the things is, I don't expect them to do anything. Then, as I mentioned earlier, we got the U.S. election on the 6th of November. Then we got the, quote, fiscal cliff we're concerned about. So I see the dollar continuing to come under pressure between now and year end. But it really may be more of a political situation in the States, because the Democrats now will formally choose Obama tonight. Now we've got, I think, 10 weeks where the market will look at how strict will the U.S. be in trying to reduce their budget deficit, okay? You know, will it be a situation where the Republicans come in line, or will the Democrats be blown out and we have a new president? But I do not expect QE3, because one of the things we can sit back, QE1, QE2, Operation Twist, okay? We still have an 8% plus unemployment rate in the States, and we will have, and I expect it tomorrow to be 8.3, so that'll be the 43rd or 44th consecutive month. So in reference to that, it may slowly be showing an improvement in the U.S. economy, but it's not helping the unemployment rate. But one of the things I think we do have to look at, retail sales in the States, improving. And the key thing is now we're seeing a dramatic from where, turnaround in the housing market. So people are beginning to feel better about themselves. And one of the things I think we will have to look at in the next 10 weeks in the U.S. election is, the swing states, Ohio, Michigan, we used to call it the Rust Belt in the States. Will these be the people who said Obama promised us one thing in 2008 and we're no better off in 2012? But as I say, next week with the Fed, I am not expecting the big bazooka or anything else. I think it'll be moral suasion, steady as she goes.
Yeah, so ultimately probably no reaction from the markets.
No.
Bill, have a very good holiday. Thanks very much. Good to see you.